Good morning and welcome to the Five with Fitz. The indices are down this morning on news that OpenAI IPO is delayed. Well, that's going to matter in 10 years. Think about this, right? I think there's a good chance that the S&P 500 is positive by the time you read this. But that's neither here nor there, right? What I want you to do is stay focused. That's what you want to think about today. Invest in optimism for the simple reason that cowering in pessimism is to ignore history, especially at times like the present, not to mention billions of dollars in profit potential. Now, I will have an update in the OBA AMAs, specifically why that holds true. But meanwhile, here's my playbook. Number one, the best, most obvious trade of the year. All right, here's the deal. I think that this is irony. The Mag 7 are spending gazillions of dollars on semiconductors and shares are down about 5% year to date. Yet, semiconductor stocks have returned 89% year to date because the Mag 7 are spending gazillions on them. Remind me again how this works. So here's a trade idea. Buy MAGs, the Round Hill Magnificent 7 ETF, and simultaneously short the semiconductor ETF SOX, or alternatively, buy puts on SOX to balance deltas, which is a more advanced and nuanced version of the very same idea. Now, if you've never heard of something like this is called a pairs trading. And what you're betting on, if you follow along or implement something similar in your own account, is a reversion to the mean or reality. In this case, the Mag 7 get potentially rewarded for the AI build out that they're funding, while the chip stocks, which have already priced in years of perfect execution, give some of that back. Now, what I like about this particular tactic at times like the present, when both elements have made abnormally large moves, or in this case, flattened out, is that you don't need the market to go up or down to make money. What you need is that the gap between these two things, the SOX and the Mag 7, to close. And history says that gap almost always does. So, Keith's investing tip. Many investors think that they must bet on the markets and or specific stocks going up or down. But what they miss or they never understood in the first place is that the relationship between two assets like this can be another source of profit potential as that relationship widens or narrows. Number two today, Wall Street has a gambling problem and polymarket just proved it. Let me explain. Polymarket has announced this week that its annualized revenue crossed $1 billion. Now, that's just 6 weeks after opening its U.S. waitlist. Daily trading volume went from something like 50 million in mid-May to over 200 million by June 20th, right? Well, that's great for Polymarket. Big fan. The bigger issue is what that says about how many people perceive investing as being indistinguishable from gambling. That's a problem. Now, my POV is popular or not. This is information laundering dressed up in a bow tie and handed a CFTC license. Not good. So here's an investing tip in this department. If you want to gamble, go to Lost Wages, aka Las Vegas. But if you want to invest, try buying the world's best companies with a focus on those making must-have products and services for the very simple reason that history shows very clearly that they tend to be top performers over time. AKA, buy the best, ignore the rest, something you hear me say a lot. Now, I've got a few ideas, and you know exactly where to find me if that's of interest. If you got it covered, cool beans. Number three, this is just asking for my trouble. Trouble, in my opinion. Airwallix just raised $320 million at $11 billion valuation. Revenues plus 74% year over year. T. Rowe Price, Bailey Gifford are both writing checks. Now, the goal is to build AI agents that autonomously handle your bookkeeping, your tax compliance, and your corporate payments. Now, no doubt the sales pitch is very compelling. Faster transactions, lower cost, no tired accountants making errors at 11 p.m., round-the-clock execution with no human bottlenecks. But here's where it gets problematic and complicated. Roughly 40% of Airwallix's employees are based in mainland China and Hong Kong, and Chinese investors still own more than 20% of the company. That's going to end well. All right? Think. Number four, Apple price hike fears are misguided. Apple dropped 6.12% yesterday on news that the company will be hiking prices because of memory-related price increases or cost increases. Now, I don't want to spend a lot of time on this, but it makes no sense, and it's important you understand this. Apple has 2.5 billion installed devices, an estimated 1.1 billion subscribers, and an incredibly interlinked consumer base, right? The average consumer keeps a Mac Airbook nearly 7 years, which means that the $200 price increase that had everybody so flustered translates into a mere $2.38 a month, less than 37% of the price of an average Starbucks cup of coffee every time you buy one. So an investing tip, if you're a trader, great, knock yourself out. But if you're an investor and a day like yesterday bothers you, like evidently it bothered a lot of people, sorry, but you're kidding yourself. And finally, number 5 today, this is bigger than a single heat wave. Europe, I feel sorry for you guys over there, so stay cool, is getting crushed, baked actually, as the current heat dome shatters numerous temperature records across the EU. As you can imagine, this is causing massive strain on health, on agriculture, on labor, on productivity, and even infrastructure. Get this, more than 85% of EU buildings were constructed before 2001, which means that they are almost totally ill-equipped to handle what's happening, right? Now, the renovation and retrofitting backlog is apparently staggering and just massive. So names like Bière Reef, I think Bière Reef, a leading HVAC cooling wholesaler come to mind, as does Ariston, which makes energy efficient heating and cooling systems. I think that's listed in Italy. But anyway, at the same time, here in the US, I'm drawn to both Train and Carrier Global, both of which have big European presence. Vertiv could also be very interesting too in this situation, but it's more of an AI data center choice because the company's focus is on thermal management as opposed to just simple heating and cooling. So, something to think about as the heat wave continues in Europe. Again, stay cool over there if you're watching this. Bottom line today, every investment has risk, but not all risks are worth the investment. So, my friends, choose wisely. Odds are excellent that your portfolio will thank you. So now, and as always, let's make it a great day. Finish the week strong. You got this, I promise. Thanks for watching. Have a great weekend, and I'll see you on Monday. Cheers.